Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So the market started off strong, and then we had two bad numbers, one the PMI and then consumer confidence. We've been hanging our hat on better U.S. economic data. Today, that threw some, cold water on the rally, but overall the market didn't break down. We held, decent support, and today was just one of those days where you didn't want to lose a lot of money. If you had hedges on, if you pressed it where it looked like, we were going to break, you screwed up your average cost. Some people got stopped out of longs. I got stopped out of a few other longs. Some of my trailers took some profits earlier on into the strength. Then once the economic data came out, tightened up. And then you still had some one-off trades to make cash flow. But overall, we're in this tricky spot where we're trying to hold higher. We're trying to consolidate. We're seeing some signs that we could go lower. But until the market confirms that, I think you stay the course. I still think you stay hedged. So this way, when we do move down, you could, create some cash flow and fund some of the longer term positions that you like. Then know whether you're trying to invest for the macro time frame where it's longer term, where you give things more room, or if you're staying involved for momentum, but when the momentum levels don't hold, you get out of the way. So overall, take a quick look at the spiders. You will see, here's that accelerated uptrend that we continue to talk about. Yesterday, we briefly broke below that 130.60, 130.80 level that I was talking about, came back above. Today, we opened up, came back, held higher. So we're sort of still below this, this uptrend or this rising channel and going to the right side of it. So there are two positive things. There's some positives and negatives here, okay? Some will say that here is your high, and it still controls this market. It's still that push-through failure that went through, that Wednesday Fed Day high, came back below, and now we opened up, and now you have a lower high. So here's your high, here's your lower high. So the question is this the start of a new trend? Or, again, are we just holding this floor to go sideways to continue? So I would say you really have to watch this, this area very closely, because if we get a close below, this 2-day zone or this floor, it could then, give us some more corrective type action, down to the mid 128s or even to retest this breakout. But for now, I would just be light on your feet. I think I'm the lightest I've been since this December 20th gap and go. This is when the market, took off and didn't look back. This was your spot to get heavy. Then when we broke this downtrend, this was another spot to get heavy. In this particular spot, it's a spot to stay involved, but not to be heavy, in my humble opinion. As far as some trades, Apple, a lot of us had overnight. It triggered above, the earnings pivot and then ran out of gas, but still looks okay. I'm still long some. I got stopped out and then I came back in. Really, this was your tier one when it went above this 2-day pivot. That's where I added. And now it's fine, but with Amazon, it could be a little pressured. So we'll see what happens tomorrow. Google, I can't say anything, too big about that except for, again, I went long on this day versus 200 day. It's working its way higher, very sloppy. Not much to say here either. Tomorrow might open down with Google, so we'll see. Not with Google, with Amazon, so we'll see how it handles. This lower area. It's still not even attempted to fill this big gap, which to me is still bearish. But the longer we stay going sideways, the more prone we can get to at least an attempt to fill this gap. But if it goes sideways and doesn't try and clear up this earnings gap, we could see a break of this area, and then we'll have to get out of the way. As far as from the short side, guys did have success with Netflix. It was on the price point sheet. I tried it yesterday. Definitely tweeted about it a few times. That level was 123.99. I did a little video if you want to look at that by itself. This was my attention this morning. It was a nice clean trade. If you look here, it triggered below yesterday's low of 123.99, and then it went as low as almost 117.78. So this was like a $6-7 trade. In the first 15 minutes, it went below 124, couldn't get back above it, and then it gave you a really nice short. If you look at it on a 5-minute basis, you could see it a little bit better. I'll do it this way so you could see it. Hold on, here we are. Let's get over here. Hold on, sorry about that. Here we go. Here was the push through. This was the push through that squeezed everybody yesterday, went as high as 129. Then it came down, hovered, didn't really break yesterday, and then today it broke below this 124, which was the high that caused the squeeze, broke below, came back, couldn't get back above, retested it, and then that was really, where you could have got shorter. Than some people got pretty aggressive once it, went below this 122, because longs definitely like, oh my goodness, we got in this at 75 or 95, whatever it was, and then you had a nice move lower, which was a nice short entry. Very, very similar strategy to our short that we did with Shield. If you remember Shield, another 80-20 reversal. That was this day when it traded through the previous high, came back below. Then you had a nice move lower. Today, some guys shorted this area on that news. And then obviously the BVSN, another trade like that, where it had that exhaustion move. You could have tried to take the pain there, which was very, very hard, or you could have waited to the next day and shorted below this low of 32 and still made a lot of money down to 20. Big move lower. Now, who knows? Maybe I can go a little sideways and give you a cute little long, but I'm going to stay away. And then today, I would think the banks acted okay. I want to see how they act tomorrow in the first day of the month. There's been a bid there. They've been doing upgrades, downgrades. They're all like playing with each other as far as ratings. I think Morgan Stanley has a nice little pattern here. If you take a look, this is a nice little bull flag here. I think it could be long versus 18 if it starts to get above 1865 and the banks want to continue. This one looks good for momentum, but make sure it goes above this with volume. Goldman Sachs was tricky, guys. Bought this on weakness. If you did, you got, you did okay. If you tried to pay through this high of 112, some guys got frustrated. Overall, though, if you're long Goldman for a macro trade and you got long when it broke this little downtrend for earnings around that 100 area we spoke about, it still looks good. It's still, taking its place in this up move, and it could hit 116. You just have to know what you're looking at. That's the next big resistance there for Goldman. As far as the OHs, just hanging around. I'm still tier 1 long. It's going sideways. It's fine. As far as the GLD, still hanging around. This is where it broke this downtrend. Couldn't even really go back and retest it, which to me is pretty bullish. Okay, so it's holding here. Looks like it's going to try and get up to that 175. So depending on your time frame, if you're still long, I would only be in a tier 1, but it does look like it's clearing this resistance, which was resistance 2, and this is really resistance 3. As far as some of the rare earths, MCP started strong and then just really wasn't ready. Where we made a lot of money today, or where the strength was really in this RE. Not sure why it's so strong. I'm not sure what the scenario here is, but this stock woke up when it broke this downtrend, in early January. Then it went sideways. Couldn't really pull in. So it held. If you look at like this for Fibonacci range, like if you want to do one real quick funny business here, from this low to the high here, right? So you take a look here. It didn't even pull back. What did it do? It didn't even, it pulled back like the 32% retracement of this entire move. Or did I put the wrong one in here? Anyway, didn't really pull back much. So at this particular point, I think it's still in the game for higher prices. If you look at the volume today, the volume in this was off the charts. Like, look at that. That's major volume. So somebody is thinking higher prices. Shorts got squeezed. I'm definitely long. I'm long some, and we'll see how it opens tomorrow. But the next pivot will be through this like 740 area, and then you have 8.25. As far as like little old IPOs that we were talking about today, this one's still hanging around, still a downtrend. I think it was upgraded by Evercore, closed near the highs of the day. If this were to start getting through maybe 2050 or 2060, next move's 22, and then a bit higher. So this one still is on the radar. Not enough volume. It needs big volume. But who knows? Maybe they try and run this a little bit. So this is the downtrend. I'm in tier 1. If it finally breaks through it and closes above it, I'll get more aggressive. So it's just like a feeler for now. As far as like a Schlumberger, still can't get above this resistance. Let's see, Caterpillar. Still, since the earnings report, it's been more of a short than a long. I still think it could work its way a bit lower. It's not really something to be watching yet. Nike, people were all over that since Jill did the option trade on it last Thursday. Still working pretty well. This was, I think, the call here or somewhere around here. It still looks okay. All in all, it's a tricky spot. And I don't want to get into that PPO trade that people did today, but you guys got to learn. Everyone loves to catch a falling knife, and this stock broke this level, this stock broke this level, and it gave you no signs of a bounce at any given point. If you're going to try and play one of these news plays, if you're going to try and play a stock that's doing like a crazy standard deviation of what it should, you trade a level versus a level. You lose a little bit of money. If you buy it and you buy it and you buy it and you buy it and you keep trying to bring your cost average down and you're guessing, that's how you blow up your account. That's how you get put out of business, and that's how we basically say adios. So at this point, not to rub any sand in any of the wounds, but this happens all the time. You have to trade a level versus a level with size you can control. Someone always knows something more than you, and that stock had no bounce. Even if it's up $3 tomorrow because someone defends it, it's still not the right play. When there's a falling knife, you get out of the way. If you try and catch a falling knife, you trade a level versus a level, and you keep trying it until finally it builds. And this stock never built. Okay, if you want to look at the 5-minute chart, it stair-stepped down the entire way. This is when it broke this level. It never gave you one sign that it was going to rally. Okay, there was one spot where maybe you could have tried it. This is actually where I donated, a few $1,000 to it just because of the size of it. But it was right around here, and I was buying it around 40, and I said, you know what? If this breaks the recent low of 38.67, I'm giving myself a $1.50 risk, because of the type of scenario that took place here. And once it broke, I got out of the way. I lost a little money trying it, but I didn't buy, because if you did that, you probably capitulated out here and you lost too much money that it's going to be too hard for you to make back. And again, those type of situations are the type of situations that could put you out of business. All right, you're much better being consistent. You're much better hitting singles and doubles. Even if I'd rather even take an earnings play with some options, so you have premium paid. At least it's something sort of calculated. A situation like that is the furthest thing from, and as appetizing as it is, because you think you can make all this money, 95% of the time you're gonna lose, and it's gonna hurt. And I heard a lot of people today, and I apologize if that's you. Go for a run or a bike, shake it off. Figure out what you did wrong, write it in your journal, and then grow from it, because you can't do this again. A level versus a level. Even when squeezes happen, like that BVSN, that was another situation that could have blown people out of the water. A level versus a level. You can't lose your, and not even confidence. You can't lose your discipline, because if you lose your discipline, that's when things get out of hand. So all in all, once again, you take a quick look at these spiders, where we're in this range. It's very, very tricky. There's really no reason to be a hero after a huge move that we had. I would say, it's got to be, neutral to positive. And if we were to break below yesterday's low, maybe I would be a little bit more neutral to negative. But at this point, I'm very, very light, and I'm going to do more of a sniper approach, because, again, I switched gears. For a month to 6 weeks, I was holding 10 to 20 positions. For one part of it, I was just long only, and in the last week, I've been long with the hedge, and it's been working. And now I'm not even, that involved, because I think that the market needs to prove that I can put more money to work, and I want to be flexible both ways. So with all that said, Scott Riley, T3 Live, the recap. See you at the morning call. Have a good night.